Good morning, everyone. My guest today is Andrew Jewett. He's the Co-CEO of Aperture, a real estate tech and investment company that has systemized the acquisition, rehabilitation, and sale of distressed residential real estate across the U.S. and is producing unlevered IRRs in excess of 50%. The company is launching its Property Coin ICO, a security token, the first professionally managed portfolio of real estate assets and loans available via the blockchain to help fund the growth of its current business. Andrew, are you ready to take us to the top?
I am. Yeah. Thanks so much for having me.
All right. So tell us more about this, because you have some background in kind of typical commercial markets. And now you're going, okay, we're going to go into property and we're going to do blockchain-based tech. So why the switch?
Well, I think when we saw what was going on with ICOs, kind of mid 2017, one of my backgrounds is traditional investment banking and more specifically asset-backed investment banking. So we saw this opportunity to really bring the best aspects of traditional finance to blockchain, because we saw the market shifting towards security tokens. And so, we had what we thought was the perfect opportunity of experience in issuing asset-backed securities, a market that clearly had some demand for it, but also we had an operating company that needed growth capital, and what better way to grow our business than grow it into a new and exciting and interesting market that is the blockchain and tokens.
When you say a security token, you mean these are actually securitized? These are real people are owning equity, etc.
Correct. Yeah. So our token is a Reg D offering in the U.S. and a Reg S offering outside of the U.S. So each property coin holder owns a fractionalized piece of our real estate portfolio that we're going to be constantly managing for them. So we like to think of this as kind of like a turnkey access to the fix and flip market in the U.S. for both U.S. and non-U.S. investors.
So give an example of how a consumer or someone listening right now that's kind of a passive investor that wants some exposure to real estate, how might they actually use this? I mean, what website do they go to? How do they give you money? How do they get money back?
So the way we've structured it is, first of all, if you go to propertycoin.re, that's where you can sign up. We're in a whitelisting and private phase mode right now. So go in, give us your information. We'll run a background. Just kind of make sure you're not a terrorist and not giving us laundered money. So you do that at propertycoin.re.
By the way, how do you check that? You kind of glance over that, but I mean, that seems pretty serious.
Yeah. So we've worked with some third parties who, so first of all, our process was designed by Dentons, which is the largest law firm in the world. And we've had the good fortune of knowing those guys for 15 years. And when we told them about our project, they're interested in working on it. And so we've engaged with them. So they designed the whole process of, what's the best practice from traditional finance world to make sure that, everybody passes the anti-money laundering and know your customer checks that are required by, not only US, but EU institutions. And so the way we're doing it is we're contracting with a third-party system that has a vast network of just information on people around the world. Checks OFAC, checks all sorts of banking restrictions and regulations, and so we run it through them.
Great. So what's the next step? You check mark. I'm not a terrorist. I want to give you money. How do I start making money?
So the way it works is you give us your money. We're going to invest it. There's a 1-year lockup period. So you have to keep your money invested for 1 year. And over that period of time, our typical hold time on a property is about 4 to 6 months. So we're going to hopefully have turned that money and made profits and reinvested those profits for you. So the way it works is we're going to take 50% of the profits. We're going to reinvest it in new properties, and so over time, those the value of that token or the value of that pool of money on a per token basis should increase. Assuming we've done our job correctly, and we obviously think we are, and we've proven it with our existing track record. But one of the complications with blockchain, and it's kind of a blessing and a curse, is that the kind of pseudo anonymity of wallet IDs is we might not necessarily know who owns the tokens on the back end. Like if somebody trades it after a year's time, we might not know who that person is, so we can't send them money until they tell us that they can. So we solve the problem of, hey, we can't hold money for somebody or send them money without performing a background check on them. So let's reinvest it and allow people to kind of gain the appreciation value of those reinvested
even while
profits
it's still anonymized.
Correct.
Yeah.
Correct.
Now, do people have to understand and actually kind of read up on you and kind of how you think about property investment and thesis, or should they just listen to 55% unlevered IRR and just go with it?
Well, we hope they certainly look into us.
So what is your thesis?
So our thesis is we're using big data and technology to really not only make the process more efficient, but source different assets than otherwise, fix and flippers were. And really, there's only two large-scale operations in the country that are doing this on a national basis. And both of my partners and I were part of the senior management team of one of them. And so we had some interesting ideas on how to utilize data and technology to increase returns and make the process much more efficient. And so we left to do that. And that's what Aperture is. We started in 2016 and basically spent all of last year building out our tech, building out our team.
So are you pre-revenue at this point?
No, we have revenue. We're pre-profit just because we've been spending a ton of money on tech and building out the staff. But part of what Property Coins are going to allow us to do is to really grow into that the company's profitable state. The trades we make are all profitable. We have zero loss rate and we have 55% unlevered IRRs. But
what's the sample size on that? How much money transaction volume total?
We've done we think we've got 30 properties across the country right now.
Okay.
So it's small. But look, we see over 3,500 properties a day through our system. And then we run our analytics on those properties and try to get to the best 5 to 10% of those a day. And, even if we bought the very best one of those a day, it would still require $20 million of capital. Part of the beauty of buying houses is they're expensive, but they do, on a dollar volume, they produce a large profit. So it's so
30, just to be clear, sorry, you're not buying $20 million mansions. You're saying of the 30 deals you've done so far on average, what's the price point on those that you're paying?
$250,000.
Yeah.
So they're our goal is to be in the most liquid price point of any given market that we operate, and so that varies depending on the market. But it's kind of anywhere in that $100,000 to $250,000, $300,000 house.
Got it. So you've deployed today between call it kind of $4.5 to $7 million total, and that's kind of what you've earned these returns on so far.
Yep.
Got it.
And with our current capital base, we have the ability to by about 15 million, and we're just adding on some additional capital sources, so that's going to grow. But yeah, you're about right on that.
How much have you put in to date, all in, just to get the tech to where it is? And then my second question is, where did that money come from? Did you raise additional capital? Was it your own capital? Where did it come from?
It started with our own capital. So 3 founders have put in our own money. We just the end of last year, we took on some outside investors, not a significant amount, but I think tech spend, we probably spent $700,000, $800,000 on the tech spend, and then obviously staffing and property and all that good stuff. So we're into this significantly of our own money, and we still own the majority stake.
And what's team size today?
We've got 14 people on staff.
Okay. So one thing that I don't understand is a company like yours, when it sounds like you took on traditional money before you do this ICO, which is a securitized token. How do those two different investor classes clash? Like how do they end up coming together?
So if you think about the ICO, think about it more like it's not, but it's very similar to a traditional fund structure, right? So that pool of money owns the assets. The traditional, our money, and we've invested in the asset side of things too, but our money, we intentionally separated them out into the operating companies. The operating company owns all the IP, owns all the tech, owns rent, salaries, healthcare, all that good stuff, but receives a management fee and a profit share from the other pocket of money, right? So we intentionally separated those out because we thought, our contacts are on Wall Street and guys who know funds. So for the fund side of things, they get that. They get owning assets. They might not necessarily get like the venture style investment, which is much more on the operating side of things. So we intentionally separated those two. But we view them as entirely symbiotic, and one receives fees from the other.
So
and the other
what is your white paper say in terms of those fees? Is it like 20% what you typically see, or no?
No. So this is the way we like to look at this. This is an operating company, right? So we're not, five guys in a Bloomberg terminal just managing a pot of money for outside investors. We've got, significant tech and overhead costs. We've got significant operational costs. So we take a very small management fee per asset. We think that that's break even or less than break even.
What's small though? Can you, less than 5%?
Oh yeah, it's like $1,000 a loan and $5,000 a property. So it's very, very small.
On the average sale price of 200 is what you're buying at, somewhere around there.
Yeah, and then we take it's a 50% profit share with the PCX entity. So it's
what's
if
PCX?
you look at, that's the property coin. That's the property coin ticker.
Got it. So, just to be clear, the 1,000 per transaction, you've done 30 today. That would only be like $30,000. That's not enough to cover a team of 14. So really, that's covering like basic costs to do a deal where you actually use money to fund the operation part of the company, the tech, the team, healthcare, et cetera, is coming from the 50% profit.
Correct.
Yeah. Interesting. How much do you hope to raise in the ICO?
So we're looking for $50 million. When we first started this thing, and honestly, we could spend 100, 200 million there. That we see so much opportunity right now in this market, but we want to be thoughtful and reasonable about our growth and making sure that we do this in a measured way. So we said, let's shoot for $50 million. Let's try and raise that from the community. I think that's a totally reasonable ask, and just given where we've seen some of the recent ICOs close, obviously we are in a tough market right now, but we're getting great feedback. We're in private sale mode, so we're just kind of negotiating with some larger institutional investors right now.
I was just going to say, if I was doing this, I would do it much like I would do a Kickstarter campaign, which is set my goal for raising 50 million. But before I even go live, already have the relationships and soft commitments for 50 million. So I hit my goal on day one, and then it's a great press story.
Right. Yeah, and that's the hope. We're so part of why we're in New York is for some big institutional meetings with some family offices right now. So we hope that's exactly the play.
Last question here. What do you think about Block One?
I don't know those guys very well, so I can't really speak super intelligently on them. But look, anybody who's doing anything that's innovative in this space, I'm a supporter of. I'm a little bit of a evangelist on this thing. I think we've tapped into something here that's going to change the traditional finance market, and it's going to change the crypto world too, from a securities token side of things.
And just to be clear, like a lot of people, the complaints early on with these ICOs are our founders would do an ICO and then they'd immediately liquidate into fiat 60, 70, 80% of what they raise and just take it to whatever and go spend it on vacations. If you raise 50 million, you won't be able to get returns. You're not going to liquidate any of that until you actually put in a property, earn profits, and you're going to take 50%.
Exactly. Yeah. So that's a good point. We are retaining 0 tokens.
Okay.
We don't own anything. We only make money if we produce profitable trades. And we get that question a lot. It's like, well, what's stopping you from just taking the money and running? And honestly, like, we live in the U.S. I like living in the U.S. I want to stay here. My family here. My wife's here. I don't want the regulators pounding on my door. So we're trying to go about this the right way. And I think if you look into our backgrounds, you'll see we're honest guys who are real and have a track record of operations, but also being in the securities markets. So we understand that market and the risks involved.
All right, Andrew, let's wrap up with the famous 5 quick answers here. Number 1, what's the last business book you read?
It was one of Jack Welch's. I forget which one of them, but
okay,
I love him.
Number 2, besides Jack Welch, is there a CEO you're following or studying?
I've been watching some of the tech industry and how they're handling some of the recent pushback on data, but just kind of watching that industry in general.
Number 3, what's your favorite online tool for building a business?
We love the Google Lab, Google Suite offering.
Number 4, Andrew, how many hours of sleep do you get every night?
I try to get 8, but it's usually around 6.
Okay, and what's your situation? You mentioned wife, so you're married, and how many kids do you have?
Married, no kids. Actually, pretty cool announcement. We are going to start raising a service animal. We're going to raise a golden retriever for use. You raise it for 18 months and then you give it to either a veteran or somebody who has special needs about that. So that's going to be our child for the next 18 months.
That's so cool. And how old are you?
I'm 35.
35. All right. Last question. What do you wish your 20-year-old self knew?
That this is hard, but you should go do it right now. I wish I'd done this a lot earlier in my career. I could have slept a lot less.
There you guys have it from Andrew, founded Aperture. He's trying to basically bring real estate investing to the masses in an anonymized way using blockchain technology. It is a securitized token. They are getting ready right now to do an ICO targeting $50 million. They've got their white paper out. You can check it out at the site. Again, invest in the property. They make money not by liquidating a huge chunk of the ICO, but actually earning profits for you. They take profits while they make money for you, which is great. And you don't actually have to reveal kind of who you are until they pay the money out, so you can take advantage of the appreciation. Andrew, thank you so much for taking us to the top.
Thanks so much.